at Torso Investments. It's good to see you, Michael. Thank you for being with us.
My pleasure. Thank you.
So what do you think?
It's a good open-ended question. So look, I think a few things are quite concerning here. First of all, the market, I would argue, has been in this state of flux for a few weeks from an internal standpoint, meaning a degree of confusion. You had lumber prices, which were quite strong, but you had small caps for a week. Typically, when lumber is strong, that's a tell on housing. Housing is a tell on the consumer. You would expect small cap stocks to outperform. It certainly has not been the case. And in today, in particular, you're seeing small caps quite weak. At the same time, you've got the dollar weakening pretty aggressively, and you've got yields also dropping. That's a little bit confusing in the sense that generally when the dollar is weak, that's a form of inflationary pressure that should push yields higher, and you haven't seen that at all. Against that backdrop, utilities are strengthening, historically a risk-off indicator. And I got to tell you, I think the complacency is enormous here. I'm a big fan of Joe Brusuelis, who was on before, and I'll tell you that he was talking about V and talking about V for vaccine, V for victory. Every W needs a V. And we don't know if we're going to yet get to some kind of major decline just yet, but I do think you're getting to a chance here. There's a scenario where you could see a pretty big decline seemingly out of nowhere just because the market needs to react to these leading indicators of risk.
So explain more on technology then. You think that's extended?
Oh, I think unequivocally. Look, a lot of people have been making the comparison that this is something similar to the late 90s. I don't think it's quite like that, but it's the obvious trade. You know, the payout is always highest where you bet where no one else is really betting. And yes, tech is in every aspect of our lives, but that doesn't mean that valuations don't matter. And I think from that perspective, as much as this is the story of the day, and really has been the story for a while, I think it's a very old story. And if you were to see a pullback in tech, it's going to take the entire markets down with it because, quite frankly, tech has been such a driver of the bull run to begin with.
So then what about small caps? Because we are seeing them selling off.
Yeah, so I think this is the very underappreciated aspect of the way this has played out. Small caps are a play again on the domestic economy. Small caps are down hard here. They stopped outperforming around 3-4 weeks ago when emerging markets started leading, and then that kind of petered out, and all the momentum again went back to large caps. When I see small caps doing what they're doing, that to me is a much better reflection of the quote-unquote market. It's always bothered me when people say the market is up. I always have to push back and say, which market? The market is not 5 stocks in the S&P 500, even though that's what's driving people's perceptions of the market. Small caps are weakening. I think if you don't see a breakout on the upside to counter some of these other risk-off indicators, that would be a pretty negative signal. That combined with, again, from a seasonality perspective, entering here in an election year, a time period where anyway generally stocks tend to weaken in these coming months leading up to the election. I keep going back to this point that I think nobody is really prepared for a major decline. And I have to tell you, the fact that everyone keeps saying, don't fight the Fed is a little bit comical to me. When people say don't fight the Fed, I want to see what those people were saying when stocks were going down and the Fed was lowering rates and the Fed was doing QE. There's always a time to fight the Fed. I wonder if we're getting closer to that moment.
Yeah, but when they started to lower rates and do QE, it was a quick turnaround because probably the last hike was not needed, maybe. I mean, that would be part of the argument. So as a portfolio manager of ATAC, the rotation fund, what are you doing? How are you positioning everything?
So everything I do is about giving voice to math. The ATAC rotation fund's a mutual fund. It's up nearly 60%, 60% for the year, because it's a risk-on, risk-off strategy.
For you.
So I know quite a bit about risk-on, risk-off dynamics, following leading indicators to risk. I think the conditions are there for an accident right now. Here's what's really makes me on edge, right? I think this is a time of living very dangerously, meaning that I don't think stocks are safe. I don't think bonds are safe, depending upon your time frame. But you've got to be able to try to rotate around the two if you're going to try and play risk on, risk off. The fact that yields are touching lows, I think, is a huge red flag. A huge red flag in the sense that it's not just a function of the Fed manipulating the bond market. The Fed actually wants yields higher because it means the yield curve is steepening, means growth inflation expectations are picking up. The fact that that hasn't happened, despite them doing QE, where, by the way, every single time they did QE, rates rose, That's a big concern. And now you are getting, I think, to the point where the market is going to start questioning just how much firepower the Fed has. I know the Fed keeps talking of the idea that they have all this ammunition. I think you're getting pretty close where the bluff is going to be called, so to speak.